Hello, welcome to the European Open Briefing for Monday, December the 11th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. So the US dollar is broadly firmer this morning, though slightly off its earlier highs. We had that stronger than expected jobs report on Friday. We also have expectations that the tax plan will get approved pretty soon by Congress. And also we have, of course, the Federal Reserve holding its scheduled policy meeting on Tuesday and Wednesday when a rate hike is expected. The pound, we saw the pound rising strongly on Friday after the UK and the EU struck a Brexit divorce deal, but the pound is off those highs today. It's actually below the 1.34 level as there is a bit of a reality check happening with investors over the still difficult talks remaining, particularly on the trade aspect of the whole deal. The euro has rebounded somewhat after touching a 2-week low yesterday. The ECB also meets this week, though we're not expecting any change from the ECB stance. We're seeing a firmer Kiwi. The New Zealand dollars jumped strongly after the surprise appointment of the new head of the Reserve Bank of New Zealand. And gold is stuck near 4-month lows, while Bitcoin, we're seeing the futures contract hitting record levels. Let's start though with the US dollar. We can see in orange here the dollar yen did reach a 4-week high of 113.68 at the start of trading in Asia this morning. It's now is somewhat around 113.40. The dollar index, we saw it hitting a 2-week high on Friday of 94.09. It's seems to be down much more sharply than the dollar yen. This morning, we saw on Friday the US economy added 228,000 jobs in November. Forecasts were for 200,000, but average earnings rose by less than expected, meaning that wage growth still is subdued in the US. Therefore, any rate hikes will likely be limited by the Fed until we see wage growth picking up more sharply. Of course, apart from the rate decision on Wednesday, there's also going to be the quarterly projections, particularly the rate hike path, the dot plot chart, where it's going to be interesting to see whether or not FOMC members will be influenced by the developments on the tax front. The tax plan does appear to be moving closer. We saw the Senate passing that last week. This week, both the Senate and the House will be trying to iron out their differences over their own versions of the bill before a final version is sent to President Trump for signing. But that is looking increasingly hopeful, so that could really happen before the end of the year, giving the dollar an additional boost. We also have some major data this week out of the US, including inflation and retail sales. So all of that will also be closely watched. Let's move on to the UK pound now, because we did see the pound rising back above the 1.35 level on Friday. It's fallen quite significantly, actually. It fell below 1.35 and 1.34. It's currently trading just below the 1.34 level. Euro pounds losses were more significant, I guess because of the direct impact with that particular cross. We saw euro pound falling to 6 months low, 0.8687, though even the euro has recovered sharply against the pound this morning. It's it's currently hovering around the 0.88 level. So although we're now going to have the trade Brexit talks moving on to the trade round and the transition deal, the implementation period. So all of that could still take several months, if not years. And also we don't know what kind of trade deal the UK will be able to reach with the EU. Media reports are suggesting that the EU will likely offer the UK a Canada's style trade agreement, which does not include the services services sector, and the UK is pushing to have some sort of free trade agreement on the services sector as well with the EU. So that could be very important for the UK's highly dominant financial services sector, and failure to reach such an agreement could still be bad news for the pound. And let's see what's happening to the euro versus the US dollar. We can see that 2-week low touched last Friday on the back of the stronger than expected jobs report. Euro dollar hit a low of 1.1728. It's recovered to around 1.1775 at the moment, though that's still some way off from the November peak of 1.1960 we saw towards the end of November. No change in policy is expected from the European Central Bank when it meets on Thursday. We already saw their major decision on October when they decided to reduce their monthly asset purchase from 60 to 30 billion euros a month. We're also going to see the flash Eurozone PMIs for November this week. Another strong showing is expected. That could provide some support for the euro, and although long-term prospects for the euro remain very bullish, for the short term at least, the euro is mainly being driven by what's happening with the US dollar. As no change from the ECB is expected in the ECB stance in the next few months. And our final currency for today, the New Zealand dollar. We can see that big jump earlier today. It's up more than 1% against the US dollar, currently trading around 0.6921. The New Zealand government appointed the new head of the Reserve Bank of New Zealand. Today they appointed Adrian Orr. He's a former deputy governor, and this was taken very positively by the markets as it removes a lot of uncertainty about who's going to be the next head of the RBNZ come March, and also the fact that Orr is not seen as somebody too radical, so he's unlikely to push for anything too dramatic, particularly any changes to the Reserve Bank of New Zealand's inflation target. So all of that was received very positively by the markets. But in the longer term, though, New Zealand dollar versus the US dollar, the pair remains fairly bearish, mainly due to the fact that we're seeing declining yield differentials between the Kiwi and the US dollar, plus uncertainty about the new government, the Labour government's economic policies there. And finally, let's have a look at gold and Bitcoin. We can see gold on the 4-hour chart here last week touched a 4-month low of $1,246 an ounce. The gold is being pressured by the growing confidence that the US tax plan will be passed. And as we get nearer to the December FOMC meeting this week, where a rate hike is expected, if we do see more hawkish forecasts by the Fed on Wednesday, that could lead to further losses for the precious metal. And on the Bitcoin. Moving on to Bitcoin now, we had the launch of the futures contracts on Chicago's CBOE exchange. We saw the futures contracts surging by 25% to rise above $18,700. Though the spot price for Bitcoin hasn't broken the record levels seen earlier this month. Is currently trading around 16,300. So the Bitcoin is seeing a lot of interest at the moment. It will likely lead to reach further record levels, but many traders are warning that it's looking more and more like a bubble waiting to burst. And finally, looking at what's coming up later today, the only real major data will be the JOLTS job openings out of the US. But just to point out the central banks meetings coming up later this week. We've got the Fed on Wednesday, the European Central Bank, the Bank of England, and the Swiss National Bank, all of which will announce their latest policy decisions this Thursday. That's it from me. Thank you very much for watching, and have a great day.